The news of a potential vaccine has sent the stock market even higher. And in this video today, we're going to take a look at 5 companies who are all working towards getting a vaccine on the market very soon. And for each of these companies, we're going to take a look at their current financial position, take a look at some financial statements like their income statement and their balance sheet, go over what we expect for the company moving forward, and for each of them, take a look at what analysts are expecting over the next 2 to 3 years for the company and their expected future growth rate. For all of the companies today, we're going to take a look at them and determine which ones we like and which ones were growing before the potential vaccine news. Before the pandemic, which companies were performing the best and which ones we expect to perform the best moving forward with or without a vaccine on the market. So welcome to the portfolio, everyone. As you know, I am the Gen Z investor, and every single day we talk about the stock market. I post daily videos going over major market news and headlines. And of course, over the past few weeks, we have been surrounded by major headlines discussing potential vaccines that has shown a positive effect on the stock market. So of course, it was very important today to make a video on the 5 top companies that are working towards getting a vaccine. Of course, there are many more than just 5, but these are some of the major players. These are some mega cap companies worth hundreds of billions of dollars that are working today and have seen some success in their clinical trials. So we're going to go over each of the companies today, but before we do, I'm going to ask you to please hit that like button and subscribe. It really does help the channel grow, and I appreciate everyone who does take a quick second to do just that. And we're going to jump into the first stock on this list, which is Pfizer. This was one of the first companies to share and publish their clinical data results, and they came in with a 95% effective vaccine. This was one of the first companies to actually publish this high of a number, and it absolutely blew away analysts and health officials' expectations. This was because before this news, we were expecting anywhere from a 50 to 75% effective vaccine, so Pfizer absolutely killed it coming in with a 95% efficiency rate. And Pfizer is not some small biotech firm. They have a market cap of over $200 billion, and they've been around for a long period of time. On the 12-month chart, shares are down 4.7%, and although they've seen some positivity with regard to the vaccine, we haven't seen a surge in the company. There has been one point where the company has been blown away with a massive upward trend. So there still may be some strong potential to get into Pfizer before or if there is a surge moving forward. And if we take a look, they trade at a forward PE of 12.63, and the current dividend yield sits at 4.16%. And if we take a look at a Morningstar report, the estimated fair value for Pfizer shares comes in around $38. So you can see right now, they are slightly being traded below the estimated fair value per the share. And moving forward over the next 12 months, analysts see the average price target for Pfizer coming in at around $41 to $42, representing a potential 14% upside in share price growth over the next year. Now we're going to take a look at Pfizer's financial statements. The company's total revenue over the past few years has been somewhat flat. If we take a look at the chart, where they kind of hovered around that $50 billion mark for total revenue over the past few years, with a slight decline as of late, of course, because of the pandemic. And if we take a look at the bottom line, their net income has been inconsistent, but each and every year they are bringing in billions and billions of dollars of net income. And if we take a look at the balance sheet, the company's short-term financial position is manageable. They have total current assets of around $47.7 billion compared to total current liabilities of around $34 billion. So a current ratio nicely above 1, so over the short term, we don't see any issues with regard to their financial health. The overall assets on the balance sheet come in at around $178 billion, and if we compare that to total liabilities of $113 billion, once again, a nice ratio to see. One another important aspects of the balance sheet is we like to see total equity growing year over year, but if we take a look at Pfizer's chart, it has been somewhat stagnant. Similar to total revenue, not a lot of growth in equity over the past 5 years, which is concerning, but of course isn't super negative at all once again. And if we take a look, they currently yield 4.16%, pay out around 52% of their earnings as a dividend, and they see their dividend growing at around 6.7% per year. So for a dividend company, that's a nice high starting yield at over 4%, and that dividend is growing at a decent rate. I'm going to call it an average dividend growth rate of around 6.7%. And their dividend is considered safe with a dividend safety score of 75. So Pfizer is one of the first companies to share their vaccine news and has been really popular in the news regarding the potential to see some growth once this vaccine is distributed across the end of 2020 and into 2021. The second major company that has been in the news with some strong results from their clinical trials is Moderna, ticker MRNA, currently trading around that $98 price point. They released their news that their vaccine showed around 95% protection, so another very solid efficiency rate from their vaccine and from their completed clinical trials. So this company has been on fire. They are up over 388% this year with a $40 billion market cap. They do not pay out a dividend, and this is the only company of the 5 that does not return investors with a cash dividend payment. And if we take a look for this company, the expected growth rate moving forward is the average price target over the next 12 months sits at around $106 per share, which only represents around a 5% growth rate from the current share price. And this company is rated to buy right now, although there is some mixed relations. You can see 3 strong buys, 8 buys, 4 holds, and even 2 sells. And moving forward, analysts are expecting some massive revenue growth throughout 2021. They're expecting this company to see some huge numbers, raking in around $5.8 billion of total revenue over the next calendar year. But if we take a look at their financial statements, they kind of paint a different picture. Before this pandemic, before this news of a potential vaccine, Moderna wasn't a massive company. And I really don't think they support the $40 billion market cap they're currently being traded at. If you see here in 2017, total revenue of $205 million, down to $135 million, 2019 down to $60 million, and of course, as of late though, because of the transition with the vaccine, some different deals going on, they've seen total revenue grow in this pandemic to $246 million. But you can see a decline in total revenue each and every year. If we take a look at their bottom line, their net income, they lose money each and every year. They aren't profitable yet. Each and every year, they consistently lose more and more money, which is another red flag compared to a company like Pfizer, who still has shown a nice positive vaccine, which makes and actually net income is profitable billions and billions of dollars each and every year. And if we take a look, though, of course, at Moderna, and we move over to their balance sheet, their short-term financial health is very strong. So they have around $3.2 billion of cash and short-term investments, and overall total current assets for the balance sheet sit at $3.5 billion. And if we compare that, they only have total current liabilities of $1.47 billion. So a current ratio well above 2. So once again, very strong over the short term. So there's no issues with regard to short-term financial health, and they will remain operational over the next 1 to 2 years very easily. Overall, though, they do have a little bit of liabilities on the balance sheet sitting around $1.89 billion. The third major company with a potential vaccine coming out soon is ticker AZN. Currently trading above $53 per share, they are up 14% this year. And they have actually not posted as successful as a result compared to Pfizer and Moderna. Their vaccine only showed an average 70% effectiveness preventing the virus. So compare that to the 95% we saw from both Pfizer and Moderna, this company is somewhat on a second tier. But overall, still a 70% effectiveness rate is better than nothing, and hopefully can be produced safely and that they can get that number bumped up. But this is another major player in the vaccine space with a market cap of $139 billion, a trailing 12-month PE ratio of 56, and a current dividend yield at 1.65%. So if we take a look at this report, analysts are expecting around 9% potential growth over the next 12 months with regard to share price, and it is considered a buy. We have 3 strong buys, 1 buy, and 1 hold, and 5 of the past 6 quarters have seen some beautiful positive earnings per share surprises, and annual revenue is expected to grow by over 23% into 2021. And if we take a look at this company's income statement, total revenue, similar to Pfizer, has been flat over the past 5 years. Not too much revenue growth, slight downward trend, but they have picked it up as of late, but they've been hovering around that 22 to 23 billion in total revenue number. And if we take a look at the bottom line, net income has been profitable, but once again, similar to top line revenue, somewhat flat with a slight decline as of late, hovering between $2.5 and $3 billion of net income each and every year. So a lot of these companies we've seen have actually been flat. They aren't really growing. The sector as a whole isn't maybe growing compared to the rates that we should be expecting. And a lot of these companies, these major players, are somewhat stagnant with regard to revenue and earnings growth. If we take a look at AZN's balance sheet, they have total current assets of over $18 billion compared to total current liabilities of around $18.9 billion. So they have a current ratio slightly below 1. So not a perfect ratio. We like to see those ratios above 1, above 1.5 at least. But I'm going to say if we round it out, they're about maybe 0.095, so close enough to 1 where over the short term, I'm not worried about their short-term financial health. They will remain operational. They will have no problem paying off their debt because they can always issue long-term debt because interest rates are extremely low right now. And of course, I'm sure they will generate some extra cash over the next few months to deal with their short-term debt. Overall, they have total assets of around $64 billion compared to total liabilities of $50 billion. And if we take a look at common equity, a little bit of a worrisome because it is declining each and every year when we do like to see total equity growing each and every year. So this company does pay out a slight dividend, yielding 1.65% right now, and they only pay out around 44% earnings as a dividend, but they actually do not have a strong dividend growth history. You can see here the 5-year average dividend growth rate is at 0%, and if we take a look at that history for dividend, they pay out a semi-annual dividend and it's stagnant payments. You can see here over the past few years, their dividend has remained flat, paying out the same rate each and every year over the past, I'm going to say 5 to 7 years. So although the dividend has not been growing, it is considered borderline safe with a dividend safety score of 60. So another company with some vaccine news, not as effective as Moderna and Pfizer, but they are posting some positive results from their clinical trials. Moving on to company number 4, we have Johnson & Johnson. This is one of the most reliable, stable, best performing dividend growth companies on the market right now. They are a dividend king, massive dividend growth rates each and every year, and currently trade at around $143 per share. They are up only 4% this year with a market cap of $378 billion. They trade at a forward PE at 18, and their current dividend yield comes in at 2.8%. And Johnson & Johnson says they are confident that around 1 billion doses of their vaccine will be distributed in 2021, and they're already looking and planning on getting more doses out in 2022. So although we don't have some massive numbers coming in from Johnson & Johnson just yet, they're expecting and they're very confident to hit that $1 billion dose distribution throughout 2021, which is a good sign. And if we take a look, they're actually trading around their estimated fair value. So the estimated fair value for this company is around $140 per share. And like the great Warren Buffett has said, it's better to buy an excellent company at a fair price than a fair company at an excellent price. And by far, Johnson & Johnson is an excellent company. So buying in today at this price point, right around their estimated fair value, would be a nice decision. And if we take a look, they're expected to grow their share price by over 15% within the next 12 months. And overall, the company is considered a buy. We have 6 strong buys, 7 buys, and 5 holds. And over the past 6 quarters, we've seen 5 earnings per share beats and 1 single in line. And over the past 3 quarters, significant earnings per share beats each and every time by over 10%. And revenue into 2021 is expected to grow by over 8% for the calendar year. Moving over to their financial statements, this is a healthcare giant and has been owned and beloved by dividend investors for decades. Total revenue, slight upward trend over the past 5 years. Of course, this company is a mega cap firm, so not a massive growth rate, but they are trending upwards, which is great to see. And with regard to net income, overall, they averaged around that $15 to $16 billion net income mark over the past 5 years as well. With regard to balance sheet though, we take a look, total current assets of over $57 billion and total current liabilities of only $38 billion. So another company with a healthy current ratio around that 1.3 to 1.4 mark. So we're not worried about the short-term financial health of Johnson & Johnson. They will be just fine. And total equity on the company continues to grow each and every year, which is a nice sign as well, although we have seen a decline from where they were a couple years ago. So although we've seen a decline, the company's been slightly flat and slightly increasing it as of late. Taking a look though at the dividend, current yield at 2.8%, they only pay out 50% of their earnings as a dividend, so lots of room to grow the business and grow the dividend. And with that 2.8% starting yield, your dividend is growing by over 6% average per year with a 58-year dividend growth streak. And Johnson & Johnson has the highest dividend safety score possible at very safe, coming in at 99. So no worry or no expectation of a dividend cut happening anytime soon. And this is another company with a potential vaccine and maybe over 1 billion doses getting out there on the market within 2021. The fifth and final company we're going to discuss today in that vaccine space is Merck. Trading around $80 right now, they are down 6% on the 1-year chart. And this company isn't really building up a vaccine, but they just made a promising acquisition in order to get a drug that will help save people's lives. They want to reduce the risk of respiratory failure or death by more than 50% with this drug that they have recently acquired. So this is big news. They want to get involved in the space to help save people's lives, and of course, I'm sure they know it will be very lucrative. If we take a look at the company, another mega cap healthcare firm that's working in this industry. Over $200 billion market cap for Merck. They trade at a forward PE of 13 and have a current dividend yield at 3.24%. If we take a look, they're actually trading below their estimated fair value, which comes in around $89 per share. So you can buy in today for around a 10% discount on estimated fair value numbers. And if we take a look, analysts are expecting over 19% growth in share price over the next year, and this company is considered a buy. 6 strong buys, 11 buys, and 5 holds. And over the past 5 quarters, you can see 5 earnings beats that are positive and 1 in line. And when they have beat, each and every time it has been by over 10%. And moving over, you can see in 2021, we're expecting more than 10% total revenue growth. If we take a look at their financials, total revenue, if we take a look at the chart, slight upward trend each and every year, which is good to see. And with regard to net income, the company is kind of stagnant, but overall the upward trend over the long term, you can see here 2.3 billion up to 6.2, 9.8, and to over 11.5 billion of net income over the past 12 months. Moving over to their balance sheet, they have total current assets of over 26 billion and total current liabilities of only 20 billion. So once again, a current ratio above 1, sitting at that 1.2 range right now, so no short-term issues with regard to Merck and their total assets. If we take a look at total equity, another company that has been declining as of late, which isn't the best sign to see, and they are a dividend-paying company yielding 3.24%. They only pay out 43% of their earnings as a dividend, and their dividend grows at 5% per year, and they support, once again, similar to Johnson & Johnson, the highest dividend safety score possible, coming in at 99, so absolutely no worry of a dividend cut coming anytime soon from Merck. So those are 5 different companies who are all operating within the vaccine space right now. These are companies with some strong news announcements, strong potential to grow moving forward, and hopefully they can get a vaccine on the market to help save people's lives. And of course, their share price may benefit from any potential deals for a national distributed vaccine. And thank you for tuning in, everyone. If you're new here, I am the Gen Z Investor. If you stuck around to the end, I really do appreciate it. Hit the like button, subscribe to the channel, and see you in tomorrow's video.